Hi, my name's Thomas and I'm from Marslands Accountants. In this video, I'm going to be talking about capital gains tax and the various different things that happen with it. So, firstly, capital gains tax needs to be reported within 60 days of the sale of the property. So, you've got 2 months from the sale to report the capital gains tax. So it's a quick turnaround, but if it's late, then you will have interest and sometimes penalties to pay on top of the tax that you owe. So obviously it's better to get in quicker because then it will prevent any interest or penalties. You've then got the annual exemption. So for 24-25, after the 5th of from the 6th of April 2024 onwards, this will be £3,000 for each individual. So this is just a relief basically to help reduce your tax. Up to the 5th of April 2024 for the previous year, this amount was 6,000. So HMRC are gradually scaling it down because they realise obviously that people are not paying capital gains tax as much if they're giving more relief. So it's unfortunate that they're reducing that, but yeah, they may eventually take it out altogether, but currently that's not been confirmed. So yeah, the annual exemption amount currently is £3,000. So then you also have the private residence relief. So if you've been living in the property, you can claim private residence relief. So how it's worked out is the total amount of months that you've owned the property, the number of months that you've lived in it, and you can also claim the final 9 months. Even if you were renting out during this time, the final 9 months can be claimed as long as you weren't living in the property in those final 9 months, because they don't like you double dipping on the relief. So if you were renting it up to when you sold it, then that additional 9 months can be claimed. But if you were living in it just before you sold it, then you wouldn't be able to claim those 9 months. Yeah, so basically the private residence relief is there to help reduce your tax bill. And yeah, it can, if you've lived in the property for a long time and rents out for a few years, it can often get rid of any tax that's due, which is great. So yeah, it's available there if you need it. And obviously if you've been living in the property, then that'll be a useful thing to help reduce your tax bill. One thing to note, if you don't have any tax due, then you don't need to do the return for HMRC with capital gains tax. You would just need to put it on the tax return to show that it's there. And you'll need to report any capital gains on the tax return in the relevant year that it's due. So say you sold it in May 2024, you would need to report that on the 2024-25 tax return to HMRC when it's due. But yeah, that's the capital gains tax. So explanation.